Hello and welcome to Straight from the Loading Dock, insights into Cleveland industrial real estate. And this time it's going to be a little bit different. We're going to be talking about capital markets. I'm here with Landon Williams, who is with our Cushman Alliance firm in Memphis, Tennessee. Welcome, Landon.
George, thanks for having me. I'm fired up to be here.
Yeah, it's good to see you. So I guess tell me a little bit about yourself.
I'm Landon. I'm from Memphis, born and raised in the South, and I run a capital markets team that we focus on primarily investment sales, but also work with investors throughout the process on maybe some debt work or whatever they need to accomplish their investment goals.
Now, you had a little bit of background with as a sports agent, right?
Yeah. Once upon a time, in my first career, I represented professional athletes. I worked for a company called Creative Artists Agency, based out of LA, but I was in the Southeast and negotiated contracts for athletes and coaches. So a lot of great stories.
Yeah, I could imagine.
It's a whole nother podcast, actually.
Yeah, I'm sure it is. So what got you into real estate?
So I got married, and the way I used to do the sports business was I would go see my clients, go travel, see them, to cultivate the relationship. But we had to travel a lot, so I was on the road like 200 nights a year.
That's tough when you're
anyway,
when you're getting married.
Yep. So need to get out of that, but got into real estate. Love the negotiation part of our business, both the sports business and then now into real estate and putting deals together and massaging the process to make it work, and I just love that part of it. And
you're obviously you're with a great group of folks over at Commercial Advisors in Memphis with Jeb Fields and Kemp Conrad, and so how did you kind of focus in on the capital markets segment? Because you see a lot of people they're in there, they kind of stay in their lanes a little bit with office, industrial, retail, multifamily, and then capital markets is one of those other pods. How did you kind of gravitate to that?
Yeah, so actually when I was switching careers to real estate, I was looking at either commercial real estate or an investment advisor. And so eventually I had the opportunity to take over and run our capital markets division, and it was kind of marrying the two. I'm still an investment advisor on a more of an entity level, and sometimes private capital individuals, but also with real estate as it relates to real estate. So it's just I enjoy it. I love kind of thinking through it, and that's really how I got there. Okay,
so I guess give me a little bit of a market overview. What are you seeing in the commercial real estate capital markets thing? Right now. I mean, it seems like it's there's been some highs and some lows, and it's just a little bit all over the board.
Yeah, it's been a roller coaster, right? Coming after COVID, and it was so hot. I mean, almost a trained monkey couldn't make money in that environment because everybody was selling, everybody was buying, free money to work with, and so that was kind of one part of it. And then as interest rates spiked, and candidly, it's not necessarily where they are; it's really how fast we got there. And so having that kind of shocked the system. So 2023 and 24 has really been the opposite of what we were just talking about. It's been a down time, both in terms of transaction volume and just overall activity. And so now it's where we are today. The Fed has reduced the federal funds rate a couple times at the end of last year. Interestingly, while that's I think that's probably good and healthy. People a lot smarter than me seem to think so. You can question the timing on that, but what's been interesting, so much of real estate really trades off the 10-year Treasury, and so the 10-year Treasury had already gone low or lower, had already decreased. When the Fed started lowering rates, the Treasury actually took the opposite direction and went back up over 100 basis points. So really, it's the challenge we're in the capital markets right now is everybody is sorting through trying to get some sort of consistency with the rules of the game.
And that's hard right now.
That's right.
Very,
when the 10-year
hard.
Treasury is kind of dancing like it has now, it's back down a little bit. But if we can get just some sort of constant, then we can make decisions based on that. So that's what that's what investors are thinking through, and that's what the capital markets we're working through.
Yeah. So aside from the interest rate part of it, which is obviously a huge component, what other kind of trends are investors, should they really be aware of?
Yep. So you talk about trends right now, probably all the time, but certainly right now, it's very much bifurcated between asset classes. Okay. So
who's the flavor? Who's the flavor of the month right now?
The darlings of the dance, flavor of the month. We in capital markets, we're all about phrases and idioms and whatever else. But industrial,
Yes.
Industrial.
Yes. I'm a little partial to industrial. Sorry.
Yeah, right. So industrial still is. It's funny. The SIOR conferences. There was a period of time where you would go to those conferences and the office brokers were like the ones that were high-fiving and everything. And then over the last 10 years or so, you go and now the industrial brokers are wearing the better watches and so it's just a funny shift. But industrial multifamily for sure. I still think the best kept secret in real estate capital markets is on the retail side. Retail was supposed to be dead, e-commerce was supposed to kill it, and it's been totally reimagined, and all the investors and lenders and everybody that fled retail to go to the other more safe areas, now there's opportunity in retail, particularly small bay. But on the other side of it is office. So as a whole, all kind of aggregated together, values have dropped roughly 20% over the last couple of years.
Yeah, it's pretty significant.
But you have to really bifurcate that. Office is significantly more, while the other asset classes are less, and it just sort of averages out to around 20%.
Yeah, it's crazy when you're sometimes seeing the industrial net rental rates higher than some of the office net rental rates. It's kind of
blows your mind.
It's kind of head scratching.
Yeah, it really is. Yeah, it almost doesn't make sense.
So there seems to be a lot of money out there chasing deals. Like in Cleveland, we've seen a significant amount of folks that have gravitated towards our market because of the competition in some of the more growth markets. So it's brought a lot of outside money to Cleveland, which is great. And then sometimes with that brings trends that we haven't typically seen because we're a little bit more of a local entrepreneurial ownership group. So having this new money come in has really been great for Northeast Ohio. It's driven up cap rates have compressed a little bit. Price per pound has risen, and then on the back end, as we're releasing product out, we're seeing that increase in some of these rental rates, especially on the industrial side. So as it relates to that capital flow, how are you seeing it in some of these secondary and tertiary type markets?
Well, I tell you, the capital markets, the market is getting creative. Okay, so one good thing right now, it's a problem, but it's still good, is that we do have capital out there, and it's looking for a place to go. So the market's getting creative in a number of ways we could discuss, but specific to what you're talking about is looking at maybe places they haven't gone before from a geography. If they're getting either not enough deal volume in some of the primary markets, or they're just looking for maybe better returns, or so like Cleveland or Memphis, where I am, or other similar type markets, maybe seeing some looks that some new money to town as a result of just the market. The money is looking for a place to land. It's been on hold for a couple of years, and now you're starting to see a lot of investors, a lot of limited partner investors, maybe putting a little pressure on some of the sponsors and the general partners to say, hey, we really want to put this money to work. Let's figure out how to make it happen. So one of the strategies might be to look at maybe secondary markets for that reason.
So why do you think that money's been on hold?
It's just it's been a function of a gap between sellers' expectations and the cost of capital that the buyer has to transact. So if they're looking for a constant IRR or whatever metric they're using, but the cost of capital has gone up, then that means the price they can pay goes down. So unless a seller was forced to sell for a loan maturity or some other reason, the seller was like, man, my valuation should be here because that's what it was, and just digesting the fact that it wasn't there anymore just wasn't part of the play. Or if I sell, what am I going to do with the money?
Right.
I'm going to be stuck.
Yeah, and we're actually I'm hearing that a lot. Is if I do sell, what am I? Where can I get that return? And because I don't want to have to pay that significant capital gains tax that a lot of people are being hit with. So that is a significant problem, and there's not necessarily the product that folks are necessarily looking at. So I mean, it kind of dovetails to my next question: is how important are off-market transactions in today's capital markets? With that need that's out there, if you're able to find that off-market opportunity, could be a pretty good win-win.
Yeah.
What are your thoughts on that?
Yeah, I mean, I'm an investment sale broker, so I always like the idea of taking it to market just to drive, get more players in to drive up value. But there's there's sometimes owners that for a variety of reasons that don't want to take the deal to market and blast it more broadly. They want to get a taste and see what a few or select few or one might bring. And so that's an opportunity right now. We're in the middle of some of those right now, actually, both office and industrial. Office with a challenged, financially engineered negative situation. Unfortunately for the owner, the seller, we have found a buyer that just makes sense to put an off-market offer in, and we're about to transact.
So what's your secret sauce to finding some of these off-market transactions?
It's just constantly, it's the same. There's no secret sauce. It is really being a resource of information and letting that channel through, just like you do. And it's constantly being on the phone in front of people, just figuring out, taking all the information we're seeing on the front lines, as well as the more macro information from within the Cushman platform and other places that we can provide for investors to make decisions. And through those conversations, just organically, these opportunities come up. So just really trying to be a resource and flow of information.
And that market expert.
Yeah, that's right.
So as we've learned through Massimo,
yes,
you're a market expert and not a commodity, right?
Yeah, that's exactly right.
Exactly right.
Know the data.
So by the way, Landon and I are both members of the Massimo group, and kind of going through that sales training, and it's one of those you're never too old to kind of go through it. As I've been a 25-year veteran. So I'm going to kind of ask you one last question. So, what advice would you give investors looking to enter the market or expand their portfolios, as we're coming here into, we're already in almost the second quarter now, today in, 2025, and kind of looking out into the future?
Yeah, okay, so first of all, we're very active. The market is very active right now. It looks a little different than maybe 2021 when deals were just transacting so fast.
Right.
Now, the activity is still there, but deals are taking a little longer. The market is staying a little more straight and narrow. Nobody's going out too far on any limbs right now. So it's probably healthy.
Yep.
It's probably a healthier place to be. So what I would tell investors is to continue to underwrite, continue to look at deals, continue to swing at them, and stay conservative, true to what we know today, and then account in the underwriting for the uncertainty that we don't know in the future, and then I also think, just from an office perspective, especially in 2025 and 2030, there's going to be a lot of really wealthy investors who look back at the office they bought in 2025 because of being able to buy it at such a low basis.
Yep.
Come up with breathe new life into it from a business strategy on how you're going to lease it out. And then as corporate America continues to firm up its footing on footprint, figuring out a way to execute a business strategy such that the office building is stabilized and takes us into that kind of next part of the cycle. So
yeah, that's awesome. Well, I certainly appreciate the time that you spent with us going through capital markets, and look forward to seeing you again